insurance so cheap? Right? We get that question a lot, and when we look at a quote for a term life insurance policy, a lot of times it is cheap, especially if we're healthy. Take a 40-year-old male, for example, right? If I'm 40, male, and let's say I'm a 40-year-old female. Females will always be priced more favorably because they live longer. If I'm going to buy $1 million policy, let's say it is a 20-year level term, meaning it is level for 20 years the premium. For the 40-year-old male, the premium might be, depending on the company, $700 a year. And for the female, it might be $550 a year. Very cheap or inexpensive. So how and why? So the insurance companies are very good at making money, right? In any insurance product, which is true. That's why they're in business and growing at the rate they are. But how term insurance is so cheap, and this is a money maker for life insurance companies, is when you look at the actual statistics. Meaning if I buy a term policy, if I'm 40 years old, and it's a 20-year term for $1 million and it costs me $700 a year, or whatever the premium comes out to, how is it so cheap? How does the company profit off of that, especially if they die within that 20-year span? Because then they've got to pay out $1 million. Here's how and why. When you look again at the statistics, when it comes to term life insurance, and this depends on the year, so the industry average, between 1 and 3% of policies actually pay out. What that means is if I have a term life insurance policy in force, there's between a 1 and 3% chance that I'm going to die while I have that term policy in force. Meaning, most people outlive their term and they won't renew it because they're older, they feel they don't need it, it becomes too expensive, whatever it might be. And the older I get, it is true, the higher the premium is because I get closer to mortality or closer to death, as the insurance company would put it. But the statistics of term policies actually paying out are very low, between 1 and 3%. Again, this depends on the year that you're looking at a study, but that's the percentage that pay out. Meaning, if there's 100 people that have a term life insurance policy, if 1% actually dies, they've collected premiums on everyone else and had to pay out one claim. So statistically, they've got it priced exactly where it needs to be, where they want it, where it's a big money maker. And really proof of that is if you go online, if you turn your TV on, how many advertisements will you see for term insurance in an hour? How about in 10 minutes? All the time, right? Select quote, cheapest term insurance, whatever it might be. Term is pushed because it is easier to market, it's very straightforward, but it's cheap. Statistically though, the insurance companies do like selling it because they know they have to pay out a very small percentage. So that is why it's so cheap, and it's only locked in for the term that I originally purchased. So if it's a 20-year, if it's a 30-year term, however long it might be, that's how long the coverage is in force. At the end of that term, the coverage is gone, and I have to buy more if I want to renew it. Either I have to go through an exam again, sometimes I can use my original health rating, but I'm older, so it will be more expensive. Hope this helps.